Something very interesting just happened with U.S. rents, further underpinning the claim that Americans are reaching their breaking point financially. Hey, everybody, you're watching Bull, Boom, Bear, Bust. Back with another dose. It is, I'm putting this out on late on Memorial Day. Hope everyone had a good Memorial Day. Most of you will be watching this the day after Memorial Day, which would be Tuesday. Interesting thing about Memorial Day, it used to be called, was it Decoration Day? Let me just bring this up here real quick. Yes, Decoration Day, basically because of the flowers and the things that were put on the graves of soldiers that had passed away. So interesting that they changed the name. It's also the last Monday in the month of May. So say goodbye to Mondays in May, and hello, June is right around the corner. Graduation's right around the corner. For those of you that have kids in school, I would be one of them, having one graduating this year, so it's definitely going to be an interesting year for us here in this household. But let's get into the news here, folks. Financially, we know that debt all-time high levels, both as a country and individuals, are carrying record amounts of debt, way above what we saw before the financial crisis in 2008, and it continues to go on and on and on. They find new ways to kick the can down the road. We're seeing some signs that consumers are distressed. We'll talk about the rents here in just a few minutes. But regarding this whole thing about will there be a recession or not, that's kind of the talking point out there in the media. Will there be a recession? Recession's around the corner. Folks, if they can print enough money, there doesn't have to be a recession, because recession means GDP, gross domestic product, has dropped for 2 consecutive quarters. Well, if they can print enough money and even send checks out to people like they did in 2020, they can avoid a recession. Now, we saw a brief recession in 2020. Maybe they didn't print enough, or maybe they didn't do it right. But the fact remains that there doesn't have to be a recession. So this whole talk about if there will be, if there won't be, it's irrelevant. What people should be looking at is how easy it is to make a living and just to get by. And when you look at most consumers, the debt is exploding, and it's getting harder to get by. As each day goes by, it's getting harder to go by overall. Now, there's a couple points of relief or areas where things are getting a little bit cheaper. Let's go ahead and talk about that here in a minute. But first, prices rising everywhere. I mean, look at what Southwest Airlines is doing. No more free checked bags. It's the last chance for Southwest plane tickets with 2 free checked bags. It seems like things that used to be free are no longer free. I was in a restaurant a couple weeks ago. They used to just have napkins out there where people could just take as many napkins as you wanted. and plastic utensils also. Now they're behind the counter. You have to ask for them. So I think companies are feeling the pinch, and you see how many fast food places in California are struggling and are going to be closing down here. And many have closed down because of the $20 an hour minimum wage here. But no more free checked baggage. And it just seems like things that used to be free are just they're charging for. And I ordered some stuff off Temu last week, a couple weeks ago now. And everything, no free shipping. There used to be a lot of stuff was free shipping if you bought a certain amount. In this case, no matter how much stuff I had in my cart, maybe I had to put more in there, but it wasn't free shipping like it used to be. That was my experience on that. And something else on this topic that I read recently was this story right here. Pay up. McDonald's customer cries, "You should be ashamed," after $9 meal surges to $19.60. Employees are complaining too. So this was kind of a deceptive headline. So what it was, this customer of McDonald's had used a delivery app. So what they did, let me bring down the receipt here, bring it up rather. They used, is it DoorDash? Okay, here's your card. 1 double cheeseburger, $9.39. If they would have just bought it in the store, it would have been $9.39. Delivery fee, $3.49 cut to $2.49. Other fees and estimated tax, $4.22. Automatic tip, $2.50. So they included the tip in there. They included the delivery fee and the taxes. So basically, you doubled your price by using one of these delivery companies. Bottom line is, and the moral of this is it doesn't pay to be lazy. Just go get your own food. I don't really trust people with my food, right? And I've gotten pizza delivered before plenty of times. But when I think about it, especially with the way society has gone, I trust people less and less. as this continues. I want less people handling my food as possible. It's already bad enough that strangers at the food place, probably touched your food in some way without gloves. And even if they had gloves on, who knows where the gloves have been. Anyway, doesn't pay to be lazy. Save money, cook at home if you can. Of course, it's fun getting food delivered. It's easy, absolutely, but you're going to double your price in some cases. And we've got this one out of CBS, folks. 1 in 4 Americans are functionally unemployed. Essentially what that means is they're barely working or they're working part-time, because even if you work a few hours, you're not going to get put in the unemployment statistic that they put out, which is between 2 and 3% now over the past year. But really, when you look at it, it's much, much worse than that. They're talking about the, it was actually 4.2% in April. So it actually is still looking pretty good, on paper. But when you look at it, what you're making and the people that are working part-time, it says here, quote, if you're part-time and can't get a full-time job, then we count you as functionally unemployed. So this metric here they're using goes on to here. We also count as functionally unemployed people who don't earn above a poverty wage survival mode. And that's really how it should be. And they came up with a number of 28%, folks. So if you're in poverty, it means you're not working enough hours or your job is too bad to even count you as really being working. So 1 in 4 people basically in poverty. So that's a little over 25%, 28% in this case, more than 1 in 4. And then 70% of the people living paycheck to paycheck because of the cost of living, folks, and also bad spending habits too. But cost of living, people getting themselves buried too deep under financial responsibilities. And you almost have to if you want to be a homeowner, unless you're already born rich or just saved up a bunch of money. You have to basically finance that home and get a mortgage. And at the end of it, you're going to pay about 3 times total. If you add up all the interest and the principal together, you're going to pay about 3 times total what the home is worth. And hopefully you got some appreciation over that time. If you didn't, you're going to spend 30 years paying that thing off. And again, paying about 3 times what the purchase price was. All right, one of these sellers of overseas made goods, in this case Shein, is being sued. I think the big ones out there are Shein, Temu is a big one. What's the other big one? I was just thinking of it earlier. Temu, Shein, and let me go look it up real quick for you. The other one, AliExpress, A-L-I Express. Well, Shein's in a bit of trouble for false advertising, and what they're saying is what the company was doing was putting out fake discounts. Inside of BBC over in the EU, fake discounts on Shein says they breached the law. And what they were doing was they're showing one price in like a little advertisement. You'd click on it and the same item wouldn't be available. It would be a different item at a higher price. Or they'll say, oh, now it's sold out. But then another tactic would be to put a price in there. You click on it, and that's the price of one, but you have to buy several to get that price, right? Things like that. And there's a few more ways that they're doing it too that I'll talk about too. But what they're doing is they're putting the price of, if you buy 4, let's say $2 each, it's $8. But you can't buy one for $2, even though the price is $2 each is advertised. So in other words, you have to spend $8, even though you clicked on it to buy one at $2, right? So things like that. And also something else here that they pointed out in this article is pressure selling. So they'll put a little timer on there and they'll say you must buy by this time. The clock starts ticking down. This discount expires in 10 minutes. Buy it now. Then you go back 20 minutes later and the price is still there, the same price. So things like that are being looked at in the EU. Now, maybe the US will do the same, but it's pretty interesting how these companies get away with that. All right, next, people, another report is out about plunging rents. Rents have dropped again, according to this latest study. Dropped all across the U.S., not in every area, but as a whole, on average, rents have dropped. In April, the median rent is down 1.7% year over year. That's bigger than the other one we looked at that was about 1%. And that's for a studio to a 2-bedroom for all of those. Across all 50 states. A slow but steady decline. Rent is now, get ready for it, $60 less than what it was at the peak in August 2022. That's actually down 3.4% from the peak. So those of you thinking I just have bad news, There you go. That's pretty good news, right? Unless you're the landlord that can't rent your property out and you have to keep lowering the rent, then it might be bad news to you. And what else did we find out recently is that the percentage of your income that goes towards housing, in this case rent, dropped again. Last month it was 23.4% of the typical renter's income that goes towards housing, in this case rent. That's down from 24.7% in April 2022 that was put out by realtors. So I think that's a good way to look at it because that takes into account your income or the average income versus the average rent. And we saw the same thing in 2008 where rents started coming down first, indicating that there was economic stress amongst the population. Things today are a lot different than 2008, so I don't think we're going to see a 2008 style collapse unless we get a black swan or something like that, something so massive that it disrupts the entire financial system, like a 2020 health crisis type of thing. But even then, they came in with so many programs where we didn't see any sort of price corrections for the most part. I mean, prices actually shot up big time after that. And all you have to do is look at inflation and cost of living skyrocketed. Car prices skyrocketed. That's one of many things that went up a lot. Car prices started to come down. It's kind of like rents. The peak was around the end of 2022, mid to late 2022. Car prices started coming down slowly, but we're still about, I think about 40% where we were before prices started going up in 2020. And now look what's happened recently. Car prices going up again. And we have the car price index now at the highest since 2023. So not what we were told, not what we were promised from this administration. Of course, the people out there, thinking that this is going to be a great economy here, are saying just wait longer because you have to wait and see how these things play out. The problem is by the time the midterms get here, if things aren't easier for most people, you're probably going to see a big shift politically, and then it's all downhill after that. Then it's going to be, you can't get any bills passed. They're not going to get anything done. So if they can't do it within 2 years, I think it's going to be game over for this administration. We'll have to find out, though. And as they say, see how it plays out. More layoffs here. Volvo cutting 3,000 jobs to reduce costs. That's another thing about trying to bring manufacturing back to the U.S. Great idea, I guess, until you really think about it, because companies are not going to want to pay these high wages, and they're trying to replace as many people as possible with automation. And we know they've really stepped their game up here in the past few years, seeing the cost of what people are demanding in wages and all these protests and people holding picket signs, demanding higher wages and unions, strikes all across the board, record numbers of strikes. They've really ramped up the automation push to try to basically, to sum it up, get rid of as many people as possible and have robots doing most of the work, automated menus, stuff like that. AI is a big part of it. Now, this recent story about these layoffs out of Volvo, that happens to be over in Sweden. But the point is, no matter where these companies are at, they're trying to get rid of people. They want to basically have automated manufacturing, right? And less problems. The robot, the automated devices are not going to be out on the sidewalk holding signs for higher wages. Some recent news, we might see some market positivity coming up here on Tuesday, which would be the 27th, because there's been an extension of this EU tariff. Stocks are up right now. Futures are up, I should say. There's going to be a delay on these 50% tariffs towards the EU. And, of course, this is today. It could change anytime. He would push back on the 50% levy deadline on the EU to July 9th. So they're extending it out here. Following a request from Ursula von der Leyen, the president of the European Commission, that comes after the administration proposed an import tax of 50% on the EU beginning June 1st. So now it's going to be pushed back to July 9th. So we'll see how that plays out. More layoffs here. Even well-known companies are not slowing down on the layoffs here. Microsoft exec, 6,000 layoffs for people doing coding at that company. And they're basically saying that AI AI is writing 30% of the code for a company, programming computers and different systems. So about 1 in 3 folks is now AI. Another example of how they're trying to replace you with technology. They're trying to replace you with robotics. And it's not going to be pretty, folks, because they're really ramping these things up, especially, again, with the higher wages and all the strikes that we saw. Remember, 2024 was record number of strikes that we saw for any year. 2025, I haven't looked at the numbers yet since we're only, well, actually, we're almost halfway through. June's right around the corner. I probably should look at it. Maybe in our next report, we'll see if we're on pace to beat the number of strikes from last year. Where did the time go? Folks, there's reports out there of $4.7 trillion in untraceable treasury payments. Nearly 1/3 of treasury payments a year lack proper identification codes. Treasury Secretary Scott Bessent testified to Congress recently. This goes along with the digital money, folks, the money that can just be created at the click of a mouse, folks. So when you have that type of money creation capabilities, they can just send out money wherever they want at the click of a mouse. It could be in secret. It could be untraceable. Nobody knows where it's going. Who knows who's getting rich off this? I mean, you look at the people that are getting rich, and I think you know who's getting rich. Of course, I'm not going to go out there and say it's definitely that because, innocent till proven guilty and all that stuff. But yeah, that's actually a real report, and they really testified about that. Senators rail against staggering $4.7 trillion in untraceable treasury payments. Moving on here with some investing details here. Solar stocks are plunging because the handouts and these energy credits that were given out are going to be pulled back. It's disastrous for the rooftop solar industry. Solar stocks plunge as the tax bill worse than feared for clean energy. The legislation still has to pass the Senate, and changes still could be made even before it's finalized here. Residential solar installer Sunrun plummeted 37%, folks. The legislation ends tax credits for installers like Sunrun that lease equipment to customers. Some 70% of rooftop solar industry now uses lease arrangements. Wow, I didn't know it was that much, 70%. Making the bill disastrous for companies like Sunrun. Guggenheim analyst told the outlet here. Also, Enphase and SolarEdge sank more than 19% and 24% each, as sales for their investors would take a hit from lower demand rooftop solar. So here's what happens when you pull back on all the freebies and all the programs that are used. Used basically to keep industries operating. And who knows, would anyone afford solar if it weren't for all these programs, and now they have to lease the panels and stuff like that, and they're getting handouts from the government? Would we even see this if it weren't for the handouts? Well, a lot of people wouldn't be able to get solar. So some people say these programs are a good thing, but then when they say, okay, we're going to cut back spending and we're going to not pay for this anymore, then you have big problems, especially if you were invested in solar. All right. But maybe we'll see a positive outcome of this, because maybe now that these programs will not be in place, if this continues to happen, maybe now prices will come down, right? Because remember, when you help people buy things that they can't buy, that they normally couldn't afford, prices go up. Look at the cost of college, one example. When everybody can get a loan, then prices are going to go up because you're going to charge more because everybody can get a loan. But if people can't get a loan, then prices are going to have to come down because people can't afford it without loans. So you got to bring down the price, right? Simple. Also, more signs of distress, folks. The buy now, pay later apps has doubled now with people using them for groceries. Doubled for people using them for groceries. It used to be, if you bought something online, a high dollar item, kind of a high ticket item, maybe furniture, you'd get the option of finance it over easy payments. And then it became more common to see lower cost items, and now food items, folks. Services like Klarna, PayPal, Affirm, and Afterpay have surged in popularity in recent years, not just for goods, but also for your trip to the grocery store, folks. So we're going to keep an eye on all this for you. Consumers strapped out, not tapped out, strapped and tapped out. And are you one of them? Hopefully you're doing good. I'm still getting by here in California on one income, believe it or not. Still making it, still doing it, and doing okay. But things can change in a hurry, and I don't want to get complacent. I wish I could, but costs are just too high to get complacent. You got to keep investing. Try to keep up with the news. Please make sure you're subscribed. Let me know what you think about this down in comments, everybody. Keep stacking. Bye for now. Peace.